All right, welcome back. We're going to answer your questions now. First up, Joe, we're coming to you from Marie. She says, hi, Scott. In today's halftime show, can I ask Joe about Twilio, please? We said, of course you can. Should we double down on Twilio?
I think you should, Marie. And listen, the company, and now we're back, listen, down significantly today. It is right back to probably a little bit lower than where I got in and began talking about getting in again. What is the company doing? What's the problem here? Why is it down so much? Well, they
forecasted a loss.
No, they're forecasting a loss because they are going out and they are going to spend for future growth. They are going to spend in terms of increasing their scale, focusing on their customer base. So you look at this forecast for the year and the loss that they're projecting, and you say to yourself, are they being very conservative in their estimates? The potential is that, yes, they are. But let's just assume that they're not and that they are going to incur the loss for the year. As a shareholder, this is exactly what you want your management team to be doing. Looking forward, thinking about the customer base, focusing on scale. And I would argue Jeff Lawson, when we look back in the next 5 to 10 years, will be considered one of the best tech CEOs out there.
Okay, good stuff. Thank you. Jenny from Scott in New Mexico, is Total a good buy for an income portfolio? Dividend yield is 4.72%. And the stock's down over a month by double digits.
I'm delighted that he asked the question the right way. For an income portfolio. I think for an income portfolio, it is a fantastic buy. You've got a 10 times multiple. You've got a 6.3% dividend yield. They just announced earnings today. They increased the dividend by 5%. So you've got a really well-run company, really well managed. And I think as much as we'd all like to believe that the world can run on sunshine and rainbows and we've got like an emissions-free world, that's not happening. And the reality is that we're going to need fossil fuels for a really long time. So they're going to continue to mint cash flow for a long time. One of the things that Cramer's been bringing up is the concept of, will the big energy companies have a valuation cap on them? Maybe they do. But as long as you know that and you can live within that and know that you're collecting the yield and growing just a little with only a little bit of multiple expansion, then it's a great stock for an income portfolio.
All right, good stuff. Great answer. Weiss, to you lastly from Jonathan in Canada. What do you do with Uber ahead of its earnings? So you used to own Lyft.
Yeah. So
what about this one ahead of the earnings?
So I have no call on the earnings. Here's what I'll think about the stock. You know, clearly there's a lot of momentum going into it. It's had a big move recently, so a lot of that move is already reflecting the quarter. So I would not buy it hoping the quarter's good. Maybe, maybe not. I don't know. But what I find kind of interesting is that you have, so many people coming out and saying, hey, they got rid of India Eats, they got to get rid of Eats in the U.S., they got Focus and Focus. Just go to Lyft. Lyft's Focus. It's U.S., it's Focus. So by that, they don't have Eats, but yet that's left for dead. So the issue I have with both of these is that California came out and said, look, these are your employees. So now they've got this experiment. In order to show they're not their employees, they're allowing them to set fares. So if that continues to move, to other states, and, this is a socialist target right here, then I think you've got issues. So it remains to be seen right now. I don't know what their path to profitability is. I don't know what Lyft's path to profitability is, so it's not my kind of thing.
Can't discount the move year to date, up 24%.
No, but why not Lyft? I mean, that's the interesting thing.
Okay, good stuff. Thank you. Thanks for the questions as always.